This is Season 1, Episode 5 of the Steady Trade Podcast. Today we're talking about the importance of creating a trading plan and sticking to it. And of course, we're still giving away a TV and a laptop computer and a bunch of other stuff. It could be yours. Take a listen. So there I was, with absolutely no clue how I got there. But there was no denying it. I was there, standing in the middle of a jungle. A big, green, humid jungle. And right next to me, in that there jungle, was my annoying, childish co-host, Steven Johnson.
It's the Steady Trade Podcast.
Steven was joking around, of course, kicking things he shouldn't have been kicking, throwing things he shouldn't have been throwing, and then he cupped his hands and raised them to his mouth and made the weirdest call I've ever heard. And then, as if on cue, a huge, ginormous lion swung in on a vine. Because apparently that's how lions move around in the jungle. Typically there aren't lions in the jungle, by the way, but anyway, go ahead.
I mean, in Steven's jungle, there's lions. There's like loads of lions, okay?
Don't ask me what he was doing there or how he gripped the vine. Just go with it. But he was a big lion, a scary lion, a big, scary lion with big, sharp, scary lion teeth. And he roared, and Steven started to cry. But not me. I was prepared. This wasn't my first encounter with a lion, and it certainly won't be my last. I knew exactly where to go and where not to go, exactly what to do and what not to do. I had experience, and I had turned that experience into a plan, and I acted immediately on that plan and got out of harm's way. But Steven didn't, because Steven didn't believe in plans.
Planning's a bit of a waste of time.
Steven simply hoped and wished that he would be okay.
If the universe thinks I deserve it,
because the universe, and because he had just read The Secret.
Do you believe enough? It's going to come true.
And that's why I'm here today. That's why I'm the one telling you why it's so important to have a plan. Farewell, Steven. We hardly knew you.
This is the Steady Trade Podcast, powered by StocksToTrade, with Swift on his feet, lion-proof Steven Johnson, and the old boring planning guy, Tim Bohen. Take it away, guys.
Welcome back to episode 5 of the Steady Trade Podcast. In today's episode, we're going to go over, one of basically probably my favorite things, facets of trading that I think is also one of the most overlooked facets of trading. I mean, everybody knows hot stocks, everybody knows picks, everybody knows charts, everybody knows news, all these other things we've talked about in the past. But where does a plan come in? So often in trading, it's just it's hold and hope is your only strategy. And we've said it a million times, but 90% of day traders fail. And I think where you can pick up a basic knowledge of trading through books, through this podcast, through YouTube videos, through a million different sources, if you don't have a plan, you're not making a trade. You're just making a gamble. You're literally going to the casino, betting on black and hoping something good comes because you're operating on a pick. You're operating on maybe the biggest gainer of the day. You're just buying, or you see some news or some world event and you think that you can either buy or short that stock and you actually expect it to work. And the dilemma is that does work sometimes. I mean, you can just, and I've heard it a million times from
Tim,
yes.
I just want to, I didn't really know what this episode was going to be about. I just saw the outline and it was like how to create a plan. And I was kind of like, I'll stick around because I want to be on every episode of the show. And I think it's cool that you have us, but I mean, I don't really get it because I think for me, I think planning's a bit of a waste of time. I mean, like, I know you'll probably throw some maxim of failing to plan is planning to fail and stuff like that.
Dang, but you stole my favorite quote.
But I mean, I kind of disagree. I think you don't need a plan. I think you can just go for it and shoot for the stars. And if you believe enough, then it's going to come true.
Well, I mean, that is a strategy. You could call that a strategy, though I think that is probably the worst strategy any trader has ever employed.
I wouldn't say it was a strategy. I would say it's more of a gut feeling. I mean, I think if you reach down and you just reach that inner belief. I mean, I've been into Buddhism a little bit, and I really believe if you touch that inner point of consciousness, you will find that gut feeling, and you'll twist it, you'll turn it, you'll move it around a little bit, and you'll just come out with that winning trade.
See, to me, I like the Buddhism reference, but I was kind of thinking a little more about The Secret. Do you remember The Secret?
Yeah, and I mean, I'm an advocate of The Secret as well. I think if you just see something, but you not think though, if you see something and you've seen it before, and you just think, do you know what it is? This is going to go to 10, and I'm going to just hold it until it goes to 10. Do you not think that's a good strategy?
No. Now, what I will say is there is nothing wrong with using your chart, using specifically the stock chart. If the stock has gone from $1 to $10 in the past, then you can actually write a trade plan off of it. But hoping it gets there, you're going to have a lot of hope. I don't think you have that much hope.
But Tim, let's go back. Let's go back to primitive times. Let's go back to say we're two men in the jungle, okay? And we've got nothing on. We've got something on, but we're two men in the jungle, okay?
Got it. Okay, this is a tough visual for me, but I'll go down this road with you.
There's a lion approaches in the jungle, okay? And you're thinking, shit.
Typically there aren't lions in the jungle, by the way, but anyway, go ahead.
I mean, in this jungle, in Steven's jungle, there's lions. There's like loads of lions, okay? But there's a lion, and you're thinking, shit, this is a lion in front of me. It's a lion. And it's got the big bushy hair. It's got the strong legs. And it's roaring. It's like, roar. You know what I mean? But it's 10 times more powerful than that. You will rely on your gut instinct to think, how do I survive? And I just want to apply that maxim to trade. And I want to think, I am in the jungle and I need to survive. So I'm waiting for my survival skills to kick in and for me to make that $1 million. I'm against the line every day. For me,
in that situation, so this is where I would dovetail and bring that back around to actually making a trade plan. So here's how I would analyze the situation. I would look at the line.
There's no plan with a lion. You can't.
No, there is. There is. Actually, I do have a plan. So I would look at the lion.
And the eyes.
I would triangulate my position between me, the lion, and you. And then I would, my plan, my execution of this plan would be to shove you to the ground and run away, thereby maximizing my potential for survival.
But you would be thinking about how to formulate the plan, and I would be running away already. And you could apply this to saying you're formulating a plan for DRYS spiking. I'm already in it, baby. I'm already in it. I'm already taking profits. You're figuring out in your head, what's the best way to do this? Like the old guy writing down the plan in the paper, and I'm just riding the storm, baby.
That's actually ironic you went that way, because that's where I was kind of headed with this is the fact that I see many, many traders that just see a stock moving and they do exactly that. DRYS is a perfect example. If you would have just jumped into that, back last fall, you could have had huge gains. I mean, that stock went from a couple dollars to, I think, $120 at its peak. You could have made money doing that, but that is not a repeatable strategy.
I mean, I disagree, but let's say we're in the jungle. You're looking the lion in the eyes. He's growling. How do you create a plan? I mean, let's not talk about me. How do you create a trade plan? But I'm looking you in the eyes like a mother lion.
Well, the first thing I would do is, in specific to a trade plan is, and I'll try and equate this to the lion story, is I am going to focus on my risk first. Okay. So what is the worst possible thing that can happen? I think that is so often overlooked in trading. Everybody sees the dollar signs, everybody sees the stacks of cash and the Rolexes and everything else, and the dream of what can happen if you're right, but so few focus on what could happen if the trade doesn't work.
But you've got to buy the ticket to win the lottery, Tim.
I agree.
You don't make a plan to win the lottery. You buy a ticket to win the lottery.
But this isn't the lottery. Okay. That is again a fallacy. And that is why so many traders fail is they look at the markets as a lottery. And this is not gambling. We are taking controlled risks. We are taking risks. Okay. Money can be lost. And that's why I think it's a failed analogy, because people think of losing money in poker or losing money on a roulette table. Okay, you can gain money, you can lose money. Trading and gambling are just almost the same thing. They're not. We're taking controlled risks and educated risks.
But even if I was going to create this plan, this boring plan, how would I start? How would I create a plan?
Well, what I always start with is, again, the chart. So I'm going to bring up the stock chart, and if this stock is spiking, I'm going to look for logical areas on the chart to set my risk. So let's use an example of a stock that was trading at $1 for, say, weeks. The stock has been sideways at $1. I come in the morning, like we've talked about in other episodes, I'm looking at the big gainers. I want to see a stock that's up big on the day. So say the stock's at $1.20 or $1.25. That puts it up 20 to 25%. Stock's already up. It has volume. Ideally, it has news, just like we talked about. So the first thing I do is I think about what is the worst thing that happened? Where is my stop loss? Where will I exit this trade if the news or the volume or the price doesn't react? That's where the chart comes in. Remember, I said the stock had been basing at $1 for several weeks. The stock's at $1.20, $1.25 right now. That's my stop loss. Step one, where do you stop out if the stock doesn't work? Use the chart. I'm going to target that $1 area.
Okay, so you're kind of thinking before you think of, because what I like to do is just think, I don't like to think about what I'm going to lose. I like to think about what I'm going to win. Because if I think enough about what I'm going to win, hopefully it'll happen. You know what I mean? Like, if the universe thinks I deserve it, the world will serve it. I mean, this is what I like to live by. But what you're trying to say is you think of the worst thing first, but you're not thinking that's kind of negative energy. Like, you're thinking, oh, this bad thing's going to happen, this bad thing's going to happen, this bad thing's going to happen. And then it does happen. So, I mean, do you not feel like, because for me, I like to just shoot for the moon. But for what you're saying you like to think about what you're going to lose before you think what you're going to win. But for me, that just adds some negative energy to it. Do you not think?
Well, I guess again, if you're trying to tap into the universal energy, you might be right. But what I target and my goal in trading is I am looking for consistent profits and a repeatable system. That is the kind of thing that can allow me, the number one goal is to be a consistently profitable trader. I want to be trading 5 years, 10 years, 20 years from now. And if I have undefined risk, so if I take your secret methodology, I buy and I hold and I hope, odds are I'll win here and there. But over time, my losses will exceed my gains. I will get frustrated with trading. I will say this doesn't work, and I will give up and I will move on. And that's exactly the kind of negative energy I want to avoid in your analogy by setting my risk first, because now I'm not trapped in a trade. I'm sure all of us that have been interested in trading have had a bag holder. It's referred to where we bought this stock, it didn't work, we overstayed. Now 6 months we're still in this stock and we're down.
For me, it just sounds that you don't believe in the power of the universe. Do you believe in the power of the universe?
I believe there are powers at work in the universe, but I do not believe they will help your trading at all.
Well, I'm going to be honest. I'm not a profitable trader as of now. So sometimes I feel like although I don't like to, I kind of want to give you the benefit of the doubt sometimes. So, let's for example, say that the universe doesn't have the powers that I think it has, and we're not in the jungle with a lion, and you've looked at the top percent gainers, and then what you're saying is you want to look at a recent line of consolidation.
Correct.
And you want to say, I'm going to base my risk off that consolidation. And if it cuts through, what are you going to do? You're going to cut it?
Yes. Yep. So that's why I always establish my stop loss first. And that's why I always recommend everybody does that, because the only thing you can control in trading is how much you lose. Okay. Now I know you're going to come back with the negative energy approach again, but you can plan for, hope for even gains, but the only thing that is in your control is controlling your losses, because ultimately the number one goal of any trader is staying in the game. And you can take small loss after small loss that keeps you in the game. And then ideally with the proper trade plan, your gains will exceed your losses.
Now, the funny thing, especially with my trading, what I've found is over my journey, every single trade I would be in, I would just lose. And I'm not sure why that would be, but it just happened. The minute I was in a trade, it would go against me. And I think the likelihood is because I was just chasing spikes. And then over time, I realized, don't get in here, getting a bit earlier, so my entries got a bit better, and a bit better. And I thought, chase it a bit less, buy it a bit before the move happens. And then now I've started not losing. I can be profitable in trades, but I'm only making $5, $4, $6. And then when I lose, I'll lose like $20. But more often than not, I am taking profit, but I'm still refining where I'm getting in the move. I'm thinking, you could have gotten a bit earlier on that short. You were a bit early on that short. You should have got in later.
And that's second part. So number one, we define our loss first. Then number two, we plan our entry. Okay. And that was a perfect segue to what step two is. You were struggling because you were impulsive on your entries. You were chasing, whether it be long or short. You would see the stock. You would see it accelerating, going higher. You would get the adrenaline going. You would jump in, just like when you were running away from the lion. You would jump into that stock, and it would immediately go against you. You would get frustrated. You would stop out, which is a good thing. Stick to your stop. But what you were lacking was to take a few moments, look at the chart, and say, what is a good entry? Where do I want to? Sometimes chasing is okay. Sometimes chasing is work. But normally on a momentum stock, especially early in the day, in our analogy we're using, or our hypothetical trade we're using right now, you're going to look to enter at pullbacks. So you don't want to chase. So if the stock is now, back to my example, now we've started the trading day, it's at $1.30, it's $1.40. Maybe it was consolidating all pre-market at that 125 level. So now you take a moment and you say, listen, I will trade this stock if it pulls back to 125. I'm not going to chase at 130, 140, 150. And if I miss this trade, I miss the trade.
Yeah, I mean, what I would probably say, if I was going to say anything about this planning nonsense, which is kind of less nonsense. It's kind of less nonsense as you explain it. It's kind of less nonsense. Maybe it isn't all the power of the universe. I'll give you that.
Am I chipping away at your faith in the secret?
I mean, I don't know. Sometimes I believe that. So, I mean, I'm not going to give it up yet. I'm not giving it up yet. That if you believe with your innermost, deepest belief, it will come. It will come. It will come some of the time. But the point that I want to make is, and I learned this in Italy when I was in Positano on a market mastery, and it was that sometimes, and there's all different situations. So, like, I'm not talking about a squeeze. I'm talking about, just say there's news on a stock, and it's pushed, it's broke out. Okay, for me, you don't want to. I mean, you might buy it on the breakout level. You might plan as, I'm going to buy it on the breakout level if it comes back down, because then you've got that really nice risk point off that breakout level, and that's a nice point. But sometimes when a stock pushes up and then it comes back down and it retests its pre-market highs, sometimes your plan can be to do the opposite of what everyone else is planning to do, because 90% of traders lose. So having the opposite plan to everyone else is probably the best plan you can have. So you buy when everyone's selling, when it looks like it's panicking, but somehow it always manages to get supported at the pre-market levels or at the low of day levels. If it's on good news, if the long-term chart's in good, what's the word? Roar, I can't get it out of me. Roar, what's the word if it's in good tax?
Well, I tell you what I like that you just said there in that rant is I think you used the word plan like 6 or 8 times.
I don't think I did. I don't think I used the word plan.
I'm pretty sure I heard you said your plan could be doing the opposite.
I said plan, not a plan. I said plan, not a plan.
I think your argument just completely fell apart right there. So
I said plan to do what everyone else is planning to do. Do the opposite of the plan. I said do the opposite of the plan. But it's kind of a plan, but it's the opposite way around. It's a null. It's a null. No,
and that's and I think that's truly the ultimate thing is, and I say you hear me say this in Stocks to Trade Pro all the time is I have I will never, well maybe not never, but very very seldom do I shoot down any trade plan. It's kind of like there's people will say, well, there's no such thing as a bad question. I don't think there's people. You say this to people in Stocks to Trade Pro. You say there's no such. I'd like to say NALP because NALP is the palindrome of plan, kind of. So I'm going to use the word NALP from now on. But you say there's no such thing as a bad NALP in Stocks to Trade. You say there's no such thing as a bad plan, but surely there are some terrible plans coming from beginner users. Well, yes, of course, but I think that. Especially if you're a new trader, you got to make mistakes. I mean, that's part of the reason we're here with the Steady Trade podcast is to, hopefully help new traders over some of those tripping points. But it's no different than learning anything else. I mean, if you're learning to ride a bike, you got to skin a few knees, you got to crash a few times, and sure they're gonna make bad plans, but the more the more you execute this process. I talk about the OODA loop, the Boyd, the fighter pilot. We've talked about it before, but you observe, you orientate, you then decide what you're going to do, and then you act on that. So OODA. And the more times, obviously, as a fighter pilot, it's not like the first time you go up in a jet, you're going to shoot down all the bad guys. You got to loop through, and you got to make mistakes. But by learning from those mistakes, and that's the beauty of what I like about writing down a trade plan. I used index cards for years. I love index cards. I have them right here. Or Evernote, or a spreadsheet, or a notebook, whatever tool you use, you write down that plan. Whatever works or doesn't work, you can then review it, and then you can learn and grow from that. Now, writing down, hoping that this stock will go up, I don't know if you're going to learn from that plan or not.
No, but I mean, from my experience, like when I speak to different traders, a lot of people make plans, a lot of people write plans, but nobody ever sticks to them. So what's the point? Because nobody sticks to them. The plan goes out the window the minute you're in the trade and your heart picks up.
Yeah, and that's a lot of that is experience. I use this analogy a lot, and not that I would ever, I'm a big fan of the military. I'm a big admirer of the military of what they do, and and the heroes that are in the military. And I use the analogy of the salty old veteran, the guy that's been on 3 tours to Afghanistan. And the other guy that just shipped in for boot camp, and they're sitting there on the battlefield. They got the same equipment. They got the same training. They're seeing the same thing. I mean, they're sitting there next to each other. And the guy on his 3rd tour is cool as a cucumber, and the guy fresh out of boot camp is panicking. They're seeing the same thing. They're doing the same thing. They have all the same training, but there's a lot of it that is just experience. And the more times you write those plans down, and the more times you break it and you review your notebook, you review your log, the better you will get. You're not going to nail it day one.
But I mean, that's fine. And sometimes I think, all right, whatever, I might make a plan. Say I make a plan. I don't want to do 3 tours of Afghanistan. I don't want to be in the jungle. I want to learn how to make a plan that I'm going to stick to now. So, I mean, what tips would you give me? What tips would you give anyone else to stick to the plan, if they had to do it now?
Well, I mean, the biggest thing I say is, number one, I write it down, and I say this over and over and over again. I used to, again, back when I was getting started trading, one of the reasons I liked about index cards, I would write the plan out and I would stick it to my monitor and it would stare me in the face. And I can tell you, you can feel like a real asshole when you say, I was going to stop loss at $1 and this stock is at 80 cents. And that index card, you know, it's almost like you see the little animation of like the little devil laughing at you or something, where that index card is like, man, you wrote down your stop loss is $1. The stock is at 80 cents. What are you doing? And that is the kind of discipline building thing that I think helps over time.
No, and I've got to say as well, I mean, every now and then, like I was taking stupid losses. Like I didn't short until a couple of months ago. And boy, did I get into a world of trouble when I first started shorting, because it's got to come down. It's got to come down. It's got to come down. And it doesn't come down. And then I took a couple of but it's weird when you buy and when you're going long, I can cut the loss long because I've learned. But when I was shorting, I couldn't cut the loss high. And for me, I thought, right, I'm going to have a $25 max loss. And every time I go over that loss, I'm writing it down in a diary. And every month I want to have less entries into that diary month on month on month. And that's really helped me massively. And I guess you can do the same thing with a plan. How many, if I didn't stick with a plan, write it in the diary.
Exactly. I love where you went there is, you know, and it's kind of what I was getting at. I mean, the more times you break that plan, the more you realize that you do not want to be there again. It's kind of like big losses. I would love to sit here and say that I've never had a big loss. I would love to sit here and say that you as the listener or you as Steven don't have to have the big loss. But unfortunately, in trading and in a lot of things, you just have to have that pain in order to learn from it and say, I never want to go back there again. And if you made 6 trades this week, you broke your plan on 5 out of 6 of them, that's going to hurt. You know, that's going to hurt your maybe not your soul, but it's going to hurt you emotionally, and you don't want to go back there. And that's really, you know, unfortunately, sometimes that's how humans learn.
The one thing that happened to me is, I mean, Tim, I want to be honest with you for a moment. I want to be truthful.
I'm ready. I'm ready for you.
I mean, are you ready? Because I've got something serious to say.
I just muted my headphones, so yes, I am ready for you.
I mean, this is on air, but I just feel like I'm ready to talk about something big. This is on air, and I'm just ready. I'm just ready. It's been stirring all day. It's been on my mind, and I'm just ready.
All right. Lay it on me, brother.
All right. I was trading today, and I left work a bit early, and I was trading, and I took a loss. And it hurt. It hurt a lot. But what I want to tell you is the loss was $2. It was a $2 loss, okay? And I was just testing out a new trading account. But you know what it is? It hurt. It really hurt. And the reason it hurt is because I said I was going to stop out at 107 as I tried out this new trading account. And do you know why I stopped out?
I do not.
Stopped out at 105, brother. Stepped out at 105. But I didn't plan on that. I didn't plan on it. I let it slip. And I was so pissed off. And then I went and I bought a Starbucks. It would be great if they sponsored the show. I went out and I bought a Starbucks, and I thought that Starbucks was 3 times more expensive than me loss, but it bloody hurt that I broke me plan, and that's why it hurt so much.
Well, and I tell you that's again back to kind of that's what it takes to learn. And I think that is how we can kind of, you know, make back to your example of the lion is, I mean, there's many different ways your plan to get away from the lion was just to run away. Well, what if there's what if there's 2 lions? You know, what if the lions are now have a plan as well, and they've got a lion behind you? What do you do then?
Do you know, this is quite exciting because say there's me and you, and we'll get back to the original example. It's me and it's you, okay? And there's a lion, and it's going roar. Same situation, just as before. You make a plan, I run away, okay? You might get away as well, but I ran away. But the thing is, though, I'm going to face a lion again.
Yep.
And next time, I might not be so lucky.
That's exactly the point, because
I'm just going to run into another lion.
Exactly. Yep. And trading is like that. You're going to run into a stock. You're every day. Well, not every day, not every trade. Sometimes now it's few and far between. Sometimes you enter a trade and it's just perfect. Everything works perfectly. Okay. The stock, you buy it, it goes straight up, you sell, and it was quote unquote easy. But very, very often, these stocks are going to go against you initially. And what are you going to do? How are you going to react to that? Are you going to add? Are you going to double down? What are you going to do in these situations? That's
Tim,
why
that's
you need
the thing. That's the thing, Tim. And I've got something else personal to say. Tim, I'm tired. I am tired, Tim. I'm tired of running because I'm just running and running and running from these lions. And I'm tired. I am tired of running from these lions.
That's and just like chasing breakouts, brother. It gets tired.
I'm tired, Tim. I am tired, and I don't know how to stop. I don't know how to stop running, Tim. And maybe you can tell me how to stop running because my legs are tired.
I can tell you how. Number one, again, let's tie this all back together. So the biggest thing I want to do is focus on the best stocks, like we've talked about in previous episodes. Put all of that together. You don't want to trade sideways stocks. You don't want to trade downtrending stocks. Let's avoid all of those. We're going to start out with the strongest stocks of the day, with the news, with a catalyst.
So you're basically saying, when you say don't trade the downtrend in stocks, you're saying don't trade the stocks without the catalyst. You're making a plan straight away saying, I'm not going to trade anything without a catalyst. I'm not going to trade anything with a bad long-term chart. That's like saying to me, I'm not going to go to that area because I know there's loads of lines there.
There you go. Very well put together.
Okay.
Yeah. Yep.
So there's two elements of a plan. And what else? What else are you going to say? I'm not going to buy unless there's a 20-minute line of consolidation, or I'm not going to buy unless it's on the breakout level. You're making these rules.
Correct. I recommend in day trading you avoid the middle of the day. That's 11 p.m. to 2 p.m. Eastern. So, if you're looking at this stock and maybe it ran early and now it's going sideways through the middle of the day, one of your rules might be avoiding midday trading and waiting, forcing yourself. So that's my plan. Actually, today, the day we're recording, I've got 2 or 3 stocks on my watch, but I'm determined to wait till 2 p.m. Eastern. We're recording this at about 1 p.m. My plan is I don't care if that stock hits my target. I don't care what it does. My plan is to wait till power hour, wait till the late day push.
No, and I mean, if you can tell me that I can stop running, if you can tell me that I can rest my weary legs, because I feel a bit like Forrest Gump. But if you can tell me that if I make these plans, then I'm going to have a bit of respite, I'm going to have a bit of rest, then maybe it's something I can do, because I recognize that, and especially for new traders, the best advice I can ever give is be super, super, super strict and have many plans and say, I'm only going to buy between 3 and 4 and 9:30 and 10, because all that stuff between 10 and 3, it's like you need to get used to. For me, I think you get used to between 3 and 4, get used to one setup and just play it again and again and again, and don't do anything else, and don't do anything else until you think, I know another setup that might work. And then do that setup as well, because everyone tries everything and fails.
Yep. And you need to lose on some shorts, and you need to lose on some breakouts. You need to learn what works for you and what works in the current market environment. But the beauty of writing everything down is, I like to call it's almost like my personal algorithm. I mean, we're not algorithmic traders, but you think about a computer making trading decisions, and the HFTs or the algos, it's just software. And that's exactly what those you hear or read about, these HFTs and these algos making billions of dollars. It's because it's a machine. It just says, if this happens, I buy. If this doesn't happen, I don't buy. If I buy and the stock does this, I stop out, et cetera, et cetera. That plan, that index card, that Evernote, whatever you use, is my personal algorithm. And it makes the decisions for me, because I know I will get emotional once I'm in the trade. I mean, I can talk about, if the lion comes out, I'll do this, I'll do that, blah, 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 whatever. But once I step out into that prairie, not the jungle, by the way, once I step out in that prairie and that lion's looking at me, I need that plan to say, this is what you do. Because I don't care. I've been in this for 10 years. I still get emotional in trades. But that trade plan tells me what to do. And when I've rehearsed it, wrote it down, that lion steps out, I know what to do.
Yeah, I mean, a good plan for a lion would just to be like, I'm just going to give them some lion food, like whatever they eat. I mean, that could be the plan.
I think they probably I've watched enough like movies through the years. I think they like British colonists. Actually, so I think that's what lions like to eat. So one of the great things, Stephen, is in StocksToTrade Pro, the mentorship program built onto StocksToTrade platform. I mean, every day you see me live, each morning, each afternoon, writing these plans down, discussing these plans. You see my screen. I actually use Evernote for this, so all of the members of STT Pro can actually see my plans. And the nice thing is you can then kind of take that plan, whether, I don't recommend using it yourself. You should always have your own plan, but you can kind of take that and use it as a case example or a case study, see what that trade did, see if it was the right approach or if it worked or if it didn't. And then that helps you, just like if you're doing math problems, obviously when you learn to add and subtract, you're doing simulated addition and subtraction models, and you can see my trade plans live and kind of turn those into your own.
But I think the important thing as well is, though, it's not about following your trade plans. It's about, and this is what Tim Sykes once said to me, it's about understanding the process that you must have went through to formulate that plan and going through the same process yourself.
Exactly. And that's why I like to talk through it live. And I think that's the value, is you can see, whether or not you trade that exact stock. And that's the beauty of, again, what we do in STT Pro is everything's recorded, archived. You can watch something from 6 months ago and apply that today. The ticker will be different, but the idea is the same. You're looking at all these things we talk about. You're making a rational, well thought out decision, and you're repeating that over and over again. But
I mean, Tim, you're a successful trader and you've been successful for years. I mean, it sounds like a lot of work making a plan. I mean, why don't I just follow your plan?
Well, that's never, you got to be a free thinker. You got to be able to do it yourself. That's not sustainable long term. I love what I do at StocksToTrade Pro. I plan on doing it for, 80 years. My goal is to live to be 120. But, at some point you need to venture out on your own, and you need to take these skills. And at some point you need to graduate and create your own trade. So you never follow anybody. You learn, just like you learned how to add and subtract from your math teacher, but you're not going to go back to that third grade classroom every time you need to add and subtract. You need to become self-sufficient at some point.
Okay, well, I've got a good question for you, and I think it can kind of bring things, it's the crux of everything we've talked about, and there's no lying in this, but there should be, but I don't know how to tie it in. But if you have a plan, does that make you a successful trader?
No, but it is one of the foundational skills that you have to have. I feel that I say this all the time. You hear me say it every day. They say 90% of traders fail. I say 90% of the 90% that fail don't have a plan. They show up unprepared. They buy random stocks. They chase stocks. They get tips from who knows where. And that is why 90% of the 90% fail. If you don't have a foundation to be able to create a logical and well thought out trade plan, then you're building, you're building a structure on top of a foundation of wet sand. Okay. You can do whatever you want with this structure, but ultimately, if you don't have a good foundation, that structure is going to fail.
I want to go a bit deep on you here, Tim. I want to go deep down. I'm going to go so deep with this question. We're going to feel like we're in Australia. How
I thought you were from Australia.
No, was it? I used to be in Australia. I used to live in Australia, but
I just thought all of these weird accents. I thought all of you guys were the same. But anyway,
just while you were talking there, I dug deep. I dug my hand deep through the Earth's core, and I pulled a question out from Australia. It was so deep, and the question is: in the abyss of market chaos, in an abyss of a chaotic world where thousands of people are having thousands of emotions, making thousands of decisions, and everything is completely random, how can you plan for something in a chaotic, random mess of a world that is trading? How can you plan for anything in that chaotic mess?
Well, again, trading is chaos for sure, but that's why number one, you control for what could go wrong initially. That's the biggest thing. And I think that's what so many traders overlook. Just like you said, you let your stop slip and it frustrated you. The only thing you can control is your loss, and you start there. That's the first thing you do with the trade. And if you do that over and over, you repeat that process, you will get better at it, and success will come as long as you control your losses. You don't take, excessive losses. You can grind and grind, learn and learn, and ultimately that's what it takes to be a consistently profitable trader.
Yeah. And I just wanted to add, I read a cool book, and the answer to the question that somebody else gave, that I was saying, how do you plan in a chaotic world of the market, and how can you plan? And the answer is because the market's predictable, because ultimately human emotion never changes.
Yep.
Human emotion is always the same, and people always make the same mistakes. They always fail. So maybe if you plan to manage your emotions better and you keep that diary, you step away from the people who are making the same emotional decisions that are predictable.
That's a great, nobody wants to do that review. Nobody wants to look internal. And that's, again, why so many traders fail. If you can take that journal and say, I did it again, eventually you're going to get to the point where you're like, I'm sick of making these same mistakes. So by having all those notes, by reviewing them daily or weekly, that's how you get better. Just like whether it be an athletic endeavor or a business endeavor, you review. Why is Tom Brady and the New England Patriots so good at what they do? They watch film over and over and over again. They prepare. Are other teams preparing? Yes, but you can Google it. You can do all the research. Nobody prepares like Belichick and Brady and the Patriots do, and that's why they're successful.
Okay, so say, for example, I make a plan, right? And say my plan is to bet on stocks going down. So I'm going to short them. So my plan is I'm going to wait for stock to go up 3 consecutive green days. And it's got to at least double its value. It's got to go from 2 to 4, 2 to 5, 2 to 6. And then I'm going to wait for it to have its first red day, and I'll look for a spike. And if it spikes into its previous day high, I'm going to short that. And then if it goes above the high, I'll cut it at 1%. But more than likely, quite often, it's going to come all the way back down because all of these penny stocks are junk. Is that a plan? Is that a good plan?
And that is beautiful. And I love that, because what you just did there took you about 20 seconds to enunciate, to detail, to write down. That is exactly what I look for. And when in StocksToTrade Pro, I review trade plans exactly like that. And if you emailed me a plan like that, I would be like, Stephen, well done. That is exactly what we're looking for.
But then I should be a successful MOFO if I stick to that plan. Would I be a successful MOFO trader if I stuck to that plan?
Well, again, there's a lot of variables, but the more you stick to a plan like that, the more likelihood you are to succeed. Yes.
So does this mean that we have just cracked trading? Have I just revealed the secret to being successful in trading? Have we just uncovered the uncoverable?
Well, I tell you what, if you do exactly what you just did and you wait for that trade and you don't, keep in mind, you might only get one of those a week. You might only get one of those a month. But if you stick to that exact plan, your odds of success are very high.
So let's just not air this episode, Tim. I will fly to meet you and we'll just stick to this plan. We'll put our money together. And we'll not even share this with any of the listeners. We'll just do it. We'll be
actually. I tell you what. Let's do this instead. From now until season 2, you are only going to trade that exact setup, and let's see where you're at. Yeah, exactly. You won't do it. Yeah.
No, don't make us do that.
Yeah, because I just constrained what you can do to only one setup, and you don't want to do that. So we'll come back in season 2. And you'll be whining about letting your stop slip and making all these mistakes because you didn't stick to that one setup.
Okay, Tim, I'll tell you what. Do you want to do it? This is mentalness. I mean, shall I do it? Is this your advice as a teacher? Is this your advice as the salty old veteran?
Is this your advice to uncover the uncoverable, to crack the uncrackable, to imagine that I've run out of references, but is this the secret? Is this the new secret of trading?
Well, again, it's being disciplined, and it's sticking to the setup that works for you. And if that example you gave has worked for you consistently because you've looked at your journal, that is the key to trading. I mean, you'll see that a million times. Over trading is what burns so many traders because they don't want to sit around and wait for that exact setup. They get bored, they get antsy, they see somebody else entering a trade, they see somebody else posting profits, and then they don't stick to their core setup. A lot of trading is not trading.
But honestly, Tim, it is though. Like when I see a stock up a few days off, I see a stock up a lot on rubbish news, and you see a double top and it's around 11 o'clock, you just think, I'm just going to short this. And worst, if you short at high day, worst, you lose 1%. And then at best, you make 4, 5, 6% when you cover half your position, and you might even make more the next day.
That is great. That is a trade plan. And again, let's see how, if you can be disciplined and stick to just that, I love your odds of success, brother.
All right, Tim, we have cracked trading and we're going to be successful millionaires from now on. But, all right, Tim, I'm going to make a commitment on this show right now. I will only short overextended stocks, and I'm not going long. I'm not going to go long. I'm going to stick to this plan until when? Give me a date and we'll see if till when?
So this episode will be released probably, I think we're scheduled for around late September to October. Let's call this like Halloween. The Halloween episode will be if Steven sticks to his trade plan.
Okay, so I mean, say this is episode 5. I will stick to the plan for the next month, okay?
Perfect.
And then we'll go we'll go 30 days. So I am on day 1 now of 30 days, which is cool because we're recording at the end of the month. We're coming into the first of the month.
Yep.
So I will do this plan for 30 days. Okay. I will only short overextended stocks at high of day. If they break, I'll cut them.
And you're going to document this so that we can review these trades as well. So
we're going to do it on the podcast.
Yep. You're going to write your trade plan down, and we're going to go over that, and we're going to see if you can actually stick to it. Me personally, I think you'll stick to it for about 3 days, but we'll see if you can do it for 30 days.
I'll do it for 30 days, and I'll probably have agreement. And Tim, we'll be in Orlando. So make a forfeit or something.
There we go.
I'm going to stick to this plan. Tim, I'm committed. So actually,
I kind of like this discussion. I think we've kind of gone over the importance of the plan, why it's important, why discipline is important. And then I actually managed, ironically, over this short period of time, I took Steven from believing in the secret into believing in the importance of a plan. And now he's on a 30-day journey to actually see if he can be disciplined enough to stick to that course.
I'm going to stick to the plan. And if I do, my new name will be the Lion Slayer.
I like it. All right.
I will be Steven the Lion Slayer, because I would have slayed them damn lions with this plan. Hey everybody, Steven Johnson here. Don't forget to head over to our website, SteadyTrade.com. You can register and fill out a survey for today's episode. And normally surveys are boring, but for you get the chance to win a greedy little bastard package. And hang on a second, if none of you go and register, maybe that greedy little bastard package can be mine. Ugh, never mind, forget what I said. Go to the website, give some feedback, tell us that I'm great, tell us that I suck, tell me that I'm terrible at this and I should never do it again, and I should not be on YouTube either, and I should just go back to my normal job in advertising. But fill out the survey, you'll stand a chance of winning the prize, and take a look at my YouTube videos. You will not believe how handsome I actually am. Girls and guys, whatever, just check it out.
Hi, this is Nathan from San Jose, California, and I like to drive into work while listening to Steven and Tim on the Steady Trade podcast until I fired my boss and made myself my own. You too can register to win real actual prizes at their website, SteadyTrade.com, and make steady trading a real-time gig. If you really like what you hear, give the podcast a 5-star rating, write a glowing review on iTunes. I did, and this is how we say goodbye in the Silicon Valley. See you next time.